Good evening, ladies and gentlemen. You're watching India Tonight with me, Sumita, Kareer on ET Now. This is a show that deep dives into the biggest story of the day. And of course, we touch upon the several other stories that we're tracking right here on the channel. So our top story on the show is all about what a terrific Thursday it's been for investors on D Street. Well, the Nifty has reclaimed the 25,500 mark after more than 8 months. The Sensex also surged over 1,000 points in trade and the Bank Nifty hit a fresh record high. Remember, this is a decisive break from the last couple of months and in fact has been seen as the Nifty has remained in the range of 24,500 to 25,200 levels. It's been range bound largely. So this broad-based rally has seen participation from mid-caps, small caps, metals and the energy space as well, with the frontline financials like HDFC Bank and Axis Bank leading the charge. But what makes this rally all the more interesting is the fact that more than 120 stocks on the BSE reportedly touched their 52-week highs. Overall, the tone was positive from the start of the trading session. It was supported by stable global cues, followed by a range-bound move in the first half. However, the momentum picked up as the session progressed as well. It was driven by strong buying that was seen in select heavyweights across sectors. However, there were pockets of pressure as well. So realty and IT, these cooled off after recent gains that these two indices were seeing. But the big question we are asking on the show tonight, what's fueling this momentum and is this sustainable? Let's take those and some other questions across to my guest who's joining us live on the broadcast, Mr. Sudip Bandyopadhyay. He's the Group Chairman of Inditrade Capital. Mr. Bandyopadhyay, the bulls are certainly back. The market seems to be taking volatility in its stride, climbing all the walls of worry that we've been seeing since the past few days. But why do you see that kind of optimism on the street?
Well, good evening. Couple of things I think was very clear. One is the cloud of war over West Asia dissipating was definitely good news for the global equity markets. And the positive mood which was prevailing in the world markets did percolate back to India as well. So there was a cheer all around. Of course, India gets more enthused when the oil prices starts coming down. And, oil prices where they are is definitely good news for India. Apart from that, I think what acted today in favor of Indian markets was that today was the monthly FNO expiry day. And that led to a lot of short covering in the markets today. And this accumulation of both these two, one is the general positive sentiment prevailing all over, global oil prices coming down, rupee appreciating, and the short covering seen in the market today did lead to this rally, which took the market past 25,500 at Nifty.
Right, sir. But the big question that is perhaps on everybody's mind is the fact that will there be steam ahead for the bulls to surge, and is this rally sustainable, and how soon will the market see correction?
Sumita, I couldn't hear you earlier.
Yes, sir. I was saying that for how long will this rally continue and how soon will investors see a possible correction, given the fact that if you're talking about the global factors, well, then you have, the deadline for relief on reciprocal tariffs that is coming to an end soon. Then you have the United States, that big, beautiful bill that's going to put some pressure on the country's fiscal deficit. And of course, some of these worries are also persisting when it comes to that peace that's been brokered, and that many are calling it fragile. So how soon are we likely to see correction, or is there steam ahead for the bulls to surge so far as the Indian market is concerned?
Well, a couple of things I would like to point out very clearly. One is, look, global markets and Indian markets will continue to remain volatile. The volatility will stem from, as you rightly pointed out, the tariff-related uncertainties and the shenanigans which we will see in the near future around the tariff. We will also have a lot of tension on the geopolitical front. While, as you rightly pointed out, temporarily there is a ceasefire, you can't rule out a flare-up once again. The Ukraine-Russia war is still continuing. There are a lot of stress on different other parts of the world. So yes, the volatility will be there, and that volatility will affect global equity markets, including India. So we should be prepared for volatility. We should not assume that market will be on a absolutely peaceful one-way trajectory. That second point is that in spite of the volatility, if you have seen the markets the way they have behaved over the last few months, there is a certain amount of resilience in Indian markets. There is a certain amount of positive bias for the Indian market. So the mood is definitely positive. Whether you talk about the global investors or the domestic investors, their outlook on India continues to remain positive. The flows into the market, whether it's a domestic mutual fund or other funds flow into the market on a continuous basis is significant. And that to an extent is leading to this kind of inflow into the market, which is sustaining a continuous positive bias for the markets.
Right. So when you talk about, these perceived volatilities, that we will perhaps see because of the kind of tensions that may emanate out of the global geopolitical setup, but domestically, one would believe that due to a good monsoon that could be in store for Indian companies, so that's going to be a big positive factor, and of course the festive season, the onset of the festive season, that's going to happen soon. But let me once again ask you about what is your medium-term view in terms of the kind of moves that we're likely to see as far as the Indian markets are concerned, and most importantly, are you comfortable with the valuations that the companies are at present?
Well, I think a couple of points you touched upon, which are very, very important, is that domestic factors do look good. They are still not very good, but there are hopes of things improving. One is definitely a good monsoon will lead to significant upside in rural consumption, which definitely corporate India needs. We will also see the spillover impact of that positive rural consumption on urban and semi-urban India. And this is absolutely critical for us. We are already seeing the capital expenditure promised by the government in the union budget getting implemented, and that is absolutely good news. Corporate India have tightened belts, cost efficiencies have increased significantly. So we are all waiting for the quarterly numbers or the performance of the corporates to improve significantly from here on. Now, whether the improvement comes in Q2 or Q3, Q4, we'll have to wait and watch, and a lot of factors will determine that. Inflation is under control, and that is leading to RBI being able to cut interest rates. That's good for growth and good for the corporate performance. So overall, we think the groundwork which is being laid at this stage for corporate performance, I think that's very, very positive. Under these circumstances, while the valuation even today does look a bit rich in multiple pockets, the opportunity of valuation or the corporate performance catching up with valuation in the near future is definitely there. Having said that, I will also say that market works on future. If there is an expectation of good numbers and good performance going forward, markets will start discounting that very, very soon. So we have to remember that valuation is always moves ahead of actual performance. So there is nothing wrong in that. The next point I would like to also mention that there are still pockets
So we'll
in
have
Indian
to
market where the valuation is attractive. So if one is coming into the market, there are pockets, there are stocks, there are segments where even now buying looks attractive.
Okay. So there are pockets of opportunities that you're seeing, and we'll come to that point a little later. But sir, as far as today's session is concerned, we did see some profit taking in defense stocks with BEL and Mazgaon Dock, and HAL. They fell, in the range of 2 to 3%. So why do you think investors are not looking at defense with a long-term view?
Well, investors always look at defense with a long-term view. I don't think there's any problem in that. But this is quite natural. When a war starts anywhere in the world and that gets wide publicity, defense stocks all over the world go up. And when the war ends, defense stocks correct to an extent. This is absolutely a normal par for the course. So we should not read too much into that. The moment this war flared up, whether it's the India-Pakistan skirmish or the this West Asia conflict, defense stocks went up significantly from where they were. And once the war stops, the stocks do correct. There's a saying that you buy war stocks when there's peace, and you sell war stocks when the war starts, or rather defense stocks. You buy defense stocks when there is peace and sell defense stocks when the war starts. that's how you should manage your portfolio for optimum returns.
Right. Well, on that note, I'm told that we're completely out of time on this chat. Thank you very much for sharing your thoughts on where the Indian markets are headed. Definitely, there is going to be volatility as, of course, the street is waiting and watching out for key decisions from global markets. But definitely, the domestic story is robust, is the sense, ladies and gentlemen, that we got from our guests. But let's